write the goddamn offer up and make the seller decide. Period. End of story. 100% of the time, it is worth writing the offer. And 100% of the time, as the listing agent, I want the offer in writing to present it to the seller to show them exactly where it is. If you are not getting educated about current housing market conditions and the economy, you are doing yourself and your clientele a disservice, whether you're a mortgage broker, title, lending, attorneys, whomever. And we're going to break this all down next on the Knowledge Brokers Podcast. I'm Tom Toole. We've got Byron Lazine here and Lisa Chinatti, and we are here talking about housing inventory still near record lows. Now we've got some nonsense coming out of the White House about higher fees for people with higher, better credit scores. There's a lot to talk about in this volatile housing market. And what I want to start with you two is an article that dropped last night by our good friend, soon to be good friend, at least in my head, he's my good friend, Logan Mohtashami, from Housing Wire, where basically in the U.S., and I want to get into the local data. Lisa, I know you chart this regularly. Right now, we've got a 2.6 month worth of inventory sitting on the market right now, coming off the single biggest home sales crash year in history. And we're still seeing this low inventory, and it doesn't seem to be bubbling up like we all thought it would. So what do you guys think about this? What are you seeing locally? Lisa, why don't we start with you? Because I know you look at this minute by minute. And what's your take on this? Are you seeing record lows in Massachusetts? Are you feeling it in the marketplace?
Yes, and yes. So interestingly, last week we actually, I thought, had kind of really hit momentum, and we're really going to hit the spring market with 1,800 new listings across the state. And this week is down again. So we're just crossed 1,000 this morning, but that's still insanely low for new listings taken. We need about 3,600 a week for the state to kind of get back into a balanced feel. So we're about a third of that. Crazy. It's sitting inventory, same situation, right? It's the same thing across the board. I actually feel remiss in having said that I thought we were on our way up. I think we might still be jumping around at the bottom.
It appears that this spring, the bottom is going to be much later than almost any spring you can point to in, certainly the last 20 plus years. And that drop last week was eye-opening because how large it was, right? We were excited about an 800 home increase across the country in inventory 2 weeks ago. And then it goes over 5,000 homes, just not only wiping that out, but just going deeper into this inventory crunch. The mainstream media headlines, they're always misleading. Like Tom mentioned one that, people are spinning that to be like some White House decision that they're not, they don't even know that this decision was made, I would imagine. So the mainstream media headlines can be very confusing. Yeah. And when they're talking about how much inventory is up, they're comparing it to last spring, which was an all-time low. This is like just the second all-time low on inventory. I mean, they're both bottom of the barrel. And the fact that last year we hit that bottoming earlier helped the spring market as people were rushing early in their year, to get ahead of those mortgage rate increases. That was helpful. New listings were at a much higher pace last year than this year. So as inventory was coming on last year, it was getting absorbed immediately, but there was more new listing options where there just isn't those opportunities this year. And so I don't know if we might be into May for the bottom, which is really rare. You don't see that in many spring markets.
Well, and this is what's going to require agents to adjust their playbook and play offense in their marketplace, because buyer fatigue is real right now. I mean, there are people, we were talking right before the show. I mean, Lisa, your team had lost a couple listings because they have buyer fatigue, because these people have to also buy a home in a lot of cases. And they're
almost every case.
Yeah. Yes, for sure. Unless they're those boomers sitting on all that cash like Scrooge McDuck in his money bin. So besides that, you've got to stay positive with these people. You got to keep people moving forward and letting them know, hey, this is what the data says. And despite these headlines, Byron, to your point, yeah, we're up since last year, but we're still at the second lowest or the third lowest or whatever the data says. And if you're not having these conversations with consumers right now, you're really missing the boat, because they're going to get annoyed. They're going to get fatigued. They're going to get sick of it. And they're just going to say, you know what? Screw it. I'm going to add on to my home if I have the ability to do it. It might be cheaper for them to do it. We've talked about this before. So staying positive and keeping people moving forward, that is a skill that is more critical than ever right now, especially for folks that are heavy on the buyer side in their business.
I think also, staying positive, but just, a dose of reality. Home prices will because of the inventory issue, will probably be higher towards the end of the year. I think they will month over month start to come down again in Q4. But as we get through the spring, the comps are going to be higher. The prices are going to be higher than they are now. So staying active in the market, it's hard. It's not fun at times, but it is the cost of trying to find a lower price deal. If you're buying in 2023, it might be now. Now, the interest rates this week wouldn't support that statement.
Yep.
But that's why, and that's why with the interest rates bouncing around, with the inventory being so certain, it's why some people have thrown in the towel. It's just easier, path of least resistance. But if you stay in the game every single week, at least you'll be a whole heck of a lot more ready to take the right opportunity when it comes.
So what are some of the...
Do you guys think that do you think the spring is going to last longer? Like, I know we've kind of talked about how, the seasonality curve hits, right? And inventory starts and sales start to decline into the fall. Do you guys think that we're going to see that while the spring is kind of waiting longer to last, the buy season is going to last longer? Or do you think it's going to follow the same curve?
I think in some markets, yes, it will. So when I look at the Connecticut market, or maybe even the Northeast overall, I think that would be the case, because I was talking to my SDRs yesterday before I flew back down here, and they said, hey, last year, July and August were both of their highest appointment set months. So they each had over 100 appointments in July and in August last year. And now they're starting, we're in the spring, so we're starting to trend up. He's just like, I feel like it's going to be later this year. He's, one of our SDR, you may call ISA, SDR, whatever you call it in your market. One of them's been with us now. This is his I think his third spring market, so definitely his second spring market. It's going to happen later in what he's seeing than, certainly than what was historically happening. And do I think it's going to last longer? I do. I think it'll get dragged out.
Well, and
because of the pent up, like, I'm ready to go, but I don't have the opportunity. But if that opportunity happens in July when people are vacationing, and if you get a drop down in interest rates, I think you will have people that come out of the woodworks July and August and make the move. It's still early enough where it's not going to interrupt end of the year holidays.
Well, but I get it on the buy side, but do sellers continue to list longer, right? Because I think that that's one of the big points that's happening right now, is that the sellers aren't listing, right? Clearly, we need the sellers to list for the inventory to pick up. And I think if the sellers listed today, we'd sell it no matter how many sellers we had, right? Do you guys think we're going to see sellers listing where normally we'd start to see that seasonal pullback up here? For us, it would happen like mid-August. And I guess I'm kind of trying to...
I think, yes, in markets that people are spending the summer months in, I think, yes. Do I think South Florida is going to see an increase in listings in the summer? I do not. Northeast, northern states, or just places where they're year-round markets, I do believe June, July, and August are going to be higher new listing months than we've seen so far in Q1 and the beginning of Q2 in this year.
So I've got some data.
Yeah, no, I get you.
Okay.
Oh,
we got to work on the transitions here, Lisa. So I've got some data on this and a case study that I prepped for the show today. So there was a couple people were speaking about this. I think it was on Housing Wire, where the mortgage rate volatility is stopping sellers from listing. Because imagine if this happens, right? And how, you guys are seeing leasebacks a lot in your marketplace, like they're negotiating these extended closings. So imagine you have this, you sell your house, you got a 120-day closing, and then rates jump up another point. Well, you're kind of screwed there, and that's what sellers are really afraid of. And on BAM, you guys wrote an article about this, about the lock-in effect. I think that's a real thing that's happening. But sellers are scared of. I literally had this conversation with my neighbor yesterday because there's a home for sale on our street, and she goes, "Well, we never move," and they're in their 70s because I've got a 3% interest rate. Why would I do that? And these people that have the motivation to move, well, okay, 6 1/8, I'm good. 6.5, I'll swallow it. But if they go back up to 7, I'm not moving again. And that's in the back of a lot of sellers' heads. So some stability with mortgage rates would go a long way here. And to your point, Byron, I went back and researched my 2012 sales data. And I looked at how that year played out, because that was a year where it was on the tail end of the depression from 2008. And we saw some recovery. And that first half of the year was not a good year for volume, at least locally here in the greater Philadelphia area. The second half, it really picked up, and we saw a lot more sales activity. We saw more people listing, and we saw a lot more pending sales. The number actually grew a bit in 2012. And then our team in 2021 felt the same thing in the second half of the year, because the first half of the year was just too frothy and too busy. So there have been some anecdotal instances where the second half of the year will outpace the first year. It's not the norm. This is out of 21 years of practicing real estate, and we're seeing it 10% of the time, 2 years. So, but in those situations, there were some extenuating circumstances and some unusual market conditions like we're seeing now.
Well, so Altos Research, if we go the week that just happened, according to Altos Research, we had 49,000. I'm just going to use round numbers. All right. So 49,000 new listings across the country in the last week. The same week last year, so 22, we had 67,000 new listings, almost 68,000 new listings. In 2021, we had 67,000 new listings. So we're 18,000 new listings in just a week off, same week over last year. If you go to 2015, that number was 94,000, 2016, 86,000, 2017, 79,000. So we're at an unprecedented level of new listings right now, coming on to the market. And so, now, I mean, there's no indication that it's a guarantee that'll happen, but you would just imagine that, based off of the last 20 years of data, we will see some more listings in this market. If you get an interest rate to get back closer to 6, which we're a long ways away from it this week, and maybe even under 6, that'll open up the opportunity for people to move around. The worst thing that happened to inventory and affordable housing was 2.5% and 3% interest rates long term.
Yeah. It's interesting. One of the other things in the article about the locked inventory, some stats about sellers. You guys had some powerful stats in there, right? I kind of polled some of the folks sitting out on the sales floor. In 2022, 32% of sellers expected that there would be a bidding war on their property. And it was interesting. Half the folks on my sales floor said that they thought it would be that more sellers would be expecting a bidding war this year. And half thought that they would be expecting, that less would be expecting a bidding war.
How about this one? Because we just assume that everybody knows they can make a profit on their home. But one out of 3 sellers say that they think they can make a profit by selling their current home in the current market. Is that not an opportunity for real estate agents to make sure that everybody in their market knows that they can not only get a profit for their home, but it's likely a substantial profit that they are sitting on if they want to unlock that equity? If two out of 3 potential sellers aren't even aware that they can get a profit, would that not be a motivating factor to getting on the market sooner or making that decision to, I will go on the market? That's an email subject line. That's a piece of information I want to get out there.
That's a powerful one. I'll make a note myself, actually.
Now when you start talking about price, almost half expect to get their asking price, which is up from almost 1 out of 4 in 2022. So there's some
Unbelievable.
conditioning,
Unbelievable.
some conditioning on price for sure. But that's just about getting the home price right. And yeah, we can get the asking price in this market. That hasn't gone away. But we still need to be conscious of, where these prices are getting comped out at. Have you seen appraisals get pushed back?
We're just
Yeah.
starting to get it. We're
One or
missing the
two,
mark.
not many.
Yeah, I mean,
Really?
it's not like a wave of them. I'd love to know in the comments if you're on YouTube, if you're experiencing it and what your market is. But we're seeing enough of them where it's been a little bit of a pattern where appraisers are starting to push back, because you got to think Q3 and Q4, you saw sales really decline. And then you did in some areas see prices take a hit. And if they just don't have the sales in that area because of lack of inventory, now they're trying to comp out and they can't use Q2 of last year. That's the last sale. I can't get there.
The appraisal
I
industry is
think it's
just so
also,
screwed in so many ways. It doesn't make logical sense. And you can have your debate on with your boy from the last time, whoever that was, Byron. But it's
SCAP.
yeah, the one appraiser that actually has like a brain. So the appraisal industry just has some challenges, and I think it's always going to be that way. But we haven't seen many, Lisa. You're getting a lot, is what I'm hearing.
yeah, we're probably missing on about 30% right now. And I suspect it'll actually get even bigger. We're putting gap coverage in almost all of our offers at this point, and we're starting to exceed the gap coverage that we're putting in. So, yeah, we're losing some deals over it where we can't find a middle ground.
I don't think enough sellers even believe that would be an issue. So that's a really hard conversation to overcome in the listing process, that we may have an appraisal issue here going for this bigger number. They don't want to have that conversation. They don't believe it. And this data here that we're looking at on the BAM article would support that 43% just fully expect to get their asking price. No questions asked. So there's got to be examples given to sellers if you're going to be getting into that situation. Like, Lisa, you've got 30% data. Those might be some, 123 Main Street, 124 Main Street. Here's what happened in this scenario, because we know when you've got more offers to choose from, and it's a huge possibility in this market, you're going to be at a position to get the best deal for you. You don't have to take the highest price. You can take the one where you can negotiate the best terms, which might be attractive to a lot of sellers who are looking to buy time in that home right now. But listen, that when that NAR stat or that NAR update came out yesterday on existing home sales, I think somewhere in there it was like basically only 1 out of 4 situation, 25% of people, or maybe it was in this survey rather, 25% of people. Yeah, it is in this survey. Sorry, in this BAM article, 25% of people need to sell their homes soon for personal reasons. So really 1 out of 4 sellers has a need driving them. And then going over to that NAR number, that's why seasonally adjusted annual rate has dropped after seeing a big increase in February. We had a 2.4% drop in March, now down to 4.44 million seasonally adjusted sales. We know we multiply that by 2, and we're talking about 9 million opportunities in the market. But off of, now we were talking about 5 million, I feel like just a month ago, and now we're back down to 4.44 million.
These predictions are always up and down. I mean, we saw last year Zillow said that prices were going to be up 17% at one point, then it was like down to 5. I mean, it's a month by month thing, and I appreciate the pivot and the adjustment. And what I'm clear on is we are going to see a big second half in the year with some inventory coming, because some of these people are just they can't push off the move anymore. Like, that life is going to take over, and that's why folks fundamentally move in the first place. So it would behoove us, and it would be great if the Fed would just chill out a little bit and let these rates kind of settle in. I know they're talking about another 25 basis point increase. Looks like that's the high probability, over 70% at the next meeting in 2.5 weeks. So that, to see the Fed chill out a little bit would go a long way here.
Yeah, the biggest thing agents and knowledge brokers can really get across to their marketplace and to everybody that they're talking to in their database And you dropped that Lance Lambert article in our sheet there. Things are really getting weird in the housing market. He
Weird.
wrote it on Fortune. You dropped the Yahoo one. The Fortune one, I went through it this week, and it goes state by state,
Yeah.
the shift of home prices for through the first 3 months. And when you look at every single state, New York has some markets where prices are down 5%, and then other markets where prices are up 5%. If you look at Tennessee, the entire state looks like it's up 5%, except for Nashville and Memphis. You've got the cities that are down almost 5% in many areas, and then even including Knoxville. You go to California, basically everybody's down. There's very few pockets where prices are up. Ohio, you've got some pockets. It was interesting. Ohio, the cities were up. So the reverse of Tennessee, the cities were up and the rural areas were some of the spots that were down. Not all rural areas, but some of them. Georgia was like that, where downtown Atlanta was up. The suburbs surrounding Atlanta were down in home prices. I imagine that that's the reverse of Massachusetts, where you've got the Boston down suburbs up in prices and downtown maybe down a little bit. And so there is, while 2 years ago you could paint a picture across the country and say that almost every market is very similar to each other, they're all up and going up, at double-digit numbers. Now it's very bifurcated, and one state might be completely different than the other state on how cities, suburbs, and rural areas are reacting to price and to inventory in relation to each other. So this is no better time than to be the most knowledgeable person on county, on town or city, and on price point categories as an agent. It's a lot of information, but if you don't know it, you'll get exposed by that buyer that's spending 3 hours a day on Zillow or RDC.
I couldn't agree with you more. And I mean, we're seeing the same thing here. Philadelphia has like triple the inventory that we see for the suburban counties. And the knowledge brokers, what they're going to do, and they're going to win in this market. There's still 8-9 million home sales that are going to happen this year, wherever the predictions land, right? And that's sides, not individual home sales, but transaction sides. Prepping before the appointment, spending 10 or 15 minutes looking up what the most recent sales are. I don't know what you two did when you were in production and when you were, out in the field. I would literally write down the sales on the MLS sheet and bring it with me. So, I mean, it's not a test when you go to these appointments. Having some crib notes, having some information ready, knowing, okay, on average, in Chester County, you get 99.8% of your asking price for the month of March. In Delaware County, it's 97.8. Whatever the numbers are, you've got to know this stuff and have it. It's not a lot of data. I mean, I don't know what stats you would recommend. Here's what I would tell people. You need to know sales data in the homes you're showing or the property you're going on for a listing appointment, number one. That's obvious. List to sales price ratio, average time on market, and then for sellers especially, if the home's not moving, I'd be showing them case studies of other properties that sold like theirs, if they had any price adjustments, and print out the listing history for them so they can see exactly what's going on. And so many agents just don't prep. They just show up and like, hey, Lisa, did you like the house? And there's no, hey, here's what this sold for. Here's what this sold for. I'm going to give you so much information that if you like the house, we can make a really well-informed decision. And that's what it takes in a market like this, because literally you cross a road in some cases. It goes to a different county, a different township, a different school district, whatever. The market's going to change. You've got to be prepping for these appointments. And I don't think it takes that long. I would imagine 15 minutes, 20 minutes of prep for every client meeting you have will help you sell 5 to 10 more homes this year at a minimum.
Knowing how many homes are active and pending in each category, the price range category, the category above, the category below. How are you going to position within one of those price ranges, to the market? How many, if your MLS does this, or maybe you're attached to like a product like Real Scout or something like that, how many active searches are there out there for those price categories is a pretty good idea. Have that data on the listing appointment, because pricing it's important. I know it's not as important as maybe 2013, right? But when we had well over 6 months of inventory in many markets, now we're at 2.6 months of inventory. I get it. There's not a lot of competition, but you have a much more savvy buyer than you did in 2021, and they will ignore an overpriced home still, if it comes out too high.
Well, you might want to coach them to write a lower offer on the overpriced home. This is something agents just don't do. I don't, and they're, and it's like they're afraid of the
Well,
rejection.
that's a good point, because agents have been conditioned of like lower price offers haven't worked the last 24 months.
I mean,
yeah, and if you can put in that lower priced offer before it sits on the market and everybody else, right? Everyone thinks after day 7, 8, 9 on the market, that's when you can offer lower. But I think there's opportunity that gets missed if you're the only offer that comes in before waiting for everybody to take that strategy.
Listing agents who don't have 10 plus years experience, when they only have one offer in a week, if they're just like a new listing agent, they've been in the game maybe 3-4 years or something like that, and they only have one offer, they find that to be a very difficult conversation. It blows the strategy that they had coming into the door. I love one offer because I've got something on the table. I know what kind of interest I have. These are a lot of data points for me to go back to the seller and have a conversation with. Hey, we can play the risky game, and I can play up the interest we have and the open house we have coming Saturday and the showings that we have. And I know how to position that conversation. There's a little more risk in us doing that because time kills deals, and we may lose this offer, especially if a new listing hits tomorrow and they go running over to that one. But if you're willing to take the risk with me, here's where I think the advantages would be. I think we could get them up on this. I think we could get them to concede on this point, and you can start to work. There's nothing better than negotiating from the listing agent's position. I don't care what market you're in. That's to me, that's the most fun you can have in being a knowledge broker, is negotiating from the listing agent's position.
Well, the alternative is, what do you do as the listing agent if the negotiation doesn't go well? You keep the listing, right? You know what you do if you're the buyer agent? You go out and show a ton more houses, and you don't know if they're going to like it or not. You've got the product. You want to be the person that controls the product. Do you guys remember this line? It's from 3-4 years ago. The first offer is usually the best offer. And sometimes it's the only offer. And it's so critical to have that conversation with folks. I mean, and especially when it's been a few days, you get one offer, that's the market speaking to you. And that's how you've got to present that to the sellers is, Hey, Byron, I know we're hearing everything about what's going on in the market. We've got one offer here. We've had 27 showings, and we've had thousands of views on Zillow and Realtor.com and whatever else. This is the market telling us something here. So let's look at this and see how we can make it work for you, because the next offer that comes in, there's no guarantee it's going to be as good as this one.
As a listing agent, do you always tell buyer agents that you have an offer? And how much do you disclose for the offer you have on the table, if we're talking about one offer?
So you got an interested party. Let's play this out here.
You got an interested party. Do you even tell them that you have one offer if you're not going to act on it? Because then 4 days later, they're going to think you were bluffing, or what happened to that offer?
Yeah.
So do you tell them that you have an offer, that you're working through an offer? What's the strategy there from a listing agent?
I've got a lot to say about
I think it depends on the first offer.
Yeah, go ahead.
Yeah, I think it depends on how strong that first offer is, right? And how close you get to actually accepting it, and whether the seller would be open to accepting the offer that you have. I think if it's not a strong offer that's not going to be accepted, I don't think it gets mentioned. I think if you're getting close to accepting it, or if the terms are what the seller would accept, I think it works in your favor. Because if the other party walks away, no big deal. You still have an offer your seller's going to accept. If they're keen to put in the offer, maybe you end up with a slightly better situation. If it's not an offer that your seller would accept, then it plays into the situation that you just mentioned. And I think also kind of shows your hand a little bit for the strength of what somebody else thought the home was worth, which isn't necessarily info you want to share.
And as a smart knowledge listing agent, you're taking into consideration, well, how many other options are there in this price range? What's the competition look like? What's on the coming soon list? You got to know day to day what you're dealing with. I mean, how many times, Tom, have you been the listing agent? You're negotiating with a buyer, and then boom, new listing comes up. All of a sudden, they ghost the listing, and then this one goes pending, and you're like, that was my buyer. I had them, Mr. and Mrs. Seller. We could have been the one doing the deal.
That's a great point. And what I'm clear on is this, that in a market that's uncertain, you've got certainty when you got paperwork in front of you. You can sign that offer. There's an expiration date. And agents in general, like I don't get this. I see it happen a lot. They'll call the listing agent. Hey, you think this low offer is going to fly? Write the goddamn offer up and make the seller decide. Period. End of story. 100% of the time, it is worth writing the offer. And 100% of the time, as the listing agent, I want the offer in writing to present it to the seller to show them exactly where it is. Because everyone thinks like, oh, they play these things out. There's no way the seller's going to accept that. There's no way the buyer's going to get it. You know what? You don't fucking know until the seller and the buyer make a decision. And the agents that are lazy with their paperwork, I can't tell you how many times I've gotten agreements accepted and offers accepted on the listing side because I went through the proper process that is what we should all be doing, and present the offer in writing, show the financials, and get the seller and the buyer to make a decision because they're the parties involved in the transaction, not us.
Great listing agents will take paperwork and present it to their sellers as an asset in the process 100% of the time, whether it says $1 or $100 million as the purchase price. Hey, Mr. Seller. Hey, Mrs. Seller. We just received an offer. It's not the one we're looking for, but I promise you this is an asset throughout our process of getting you the number that you want. This will be leverage. Let's have a conversation about how we're going to position it as such. And you take the drama and the anxiety out of the seller and let them exhale when you explain it to them like that before you give them the price. Don't be the lazy agent who sends over the paperwork on a forwarded email where they're reading this number. I just received an asset to our process. This is going to be used as leverage. When can we get on a quick screen share and just review it? And I'll be able to explain to you how we're going to position this to ultimately get you the price that we talked about that you're comfortable walking away with. That's what a good listing agent does in this market.
You know what this reminds me of? A couple, maybe 6 weeks ago, there was a product that rolled out that allowed listing agents to put it on their listings where bidding happened live online. Did you guys see that?
No, is that on an MLS feature? Or?
No, I'm gonna have to go back. I'll pull out what it was and I'll comment on the videos somewhere with what it was. But it was a third party provider that was offering the service, and it was very hotly debated in some areas because in the cases of multiple offers, when you know you're going to have 5, 10, 15 offers, it could essentially be a benefit to the seller, or could it not, right? And there was a lot of debate, like for the buyer who said, like, I know the home is priced at, $700,000. I'd pay $800,000, but I don't want to be the fool that pays $800,000 if nobody else would. So I'm going to offer $750,000. And then they find out that the home sold for $790,000, right? And that buyer says, gosh, I would have paid $800,000, right? You play it out. And then the listing agent didn't really disclose to the other agent, interesting comments, right? But thinking about it, in the case where they only get one offer, is it a benefit or is it not to have other people see kind of where it stands?
See,
how many offers?
Yeah,
you're saying you could see how many offers there were? Was that transparent?
Yeah. Let me see if I can find this. You guys keep talking. Let me see if I can find it.
Yeah, I tried Googling.
I certainly just being somebody who's personally sold, a lot of real estate, not only for clients but for myself. I would not want anybody seeing how many offers I've received, whether that's 20 or 1.
Yeah, well,
I want to be the one that has the full deck of cards, and I don't want people to see my hand when I'm sitting at the poker table.
Well, I agree with that, Byron, and that this is a great example of where I'm clear. Like everyone's worried, like AI and robots are going to take over realtors. First of all, in Pennsylvania, the law says the seller gets to decide if you disclose the existence of other offers or not. It's right in the listing contract.
Same in Connecticut.
Okay, so that's good to know. I would take it one.
I think that's probably pretty common in most states. Let us know if your state's different.
Okay. And then
Massachusetts doesn't have it built in. New Hampshire does. It's very interesting between the two.
Of course, Massachusetts does not. Of course.
Enter Byron's comments.
Yeah. What I would argue here, though, is where people say like robots are going to replace real estate agents. You need to have a judgment call. You need someone who knows how to do this, or has been trained to do this, or is it getting advised? Like if you're a new agent on a team or something like that, you're getting advised how to handle these situations because there's a lot of money on the line. And you talked about what the offers look like. Your initial question here: well, if you got one crap offer and one really good offer, you know what I go to the seller with? I'm like, hey, we got one really crappy offer here, and we got a great offer. This probably tells me we should jump on the second one here. What do you think? And you've got to read these situations, and it's case by case. It's no different than selling a company or selling any other large asset. So I think this really demonstrates, like, I don't want this to be a stock ticker of what's going on in my house. I wouldn't want that as a home seller, let alone an agent. It takes all the leverage out of it.
I mean, imagine if that's how
Offer.io.
Offer.io. I'll take a look at that. But imagine to the stock ticker point, because everything wants to be day to day now of stock ticker of what it's, and then it reverts over to dan.com.
Yeah, what the hell is this? Yeah.
Are you sure it's offer?
No.
What do you?
I put
what is it?
OFFR.io.
Oh, okay. OOFR.io. All right.
Based in London.
So imagine if pricing, so interest rates in the last week and a half have gone from like 6.25 to 6.75, literally in the last 2 weeks across the board, according to Mortgage News Daily. Imagine if your listing price or your home value was ticking up and down in relation to the mortgage rate because of what people can afford now on a monthly payment every single day. Or as the 10 years going up and down, your home price is ticking up and down. Like, okay, an hour ago it was worth $1,000 more than now because the 10 years increasing and the 30 years going up, and people, right? Like hour by hour, that would be insane.
I would, just you think about it. The sellers, when this doesn't happen when companies are getting sold, right? I've had a couple clients that went through selling their company. I spoke to Greer Allen. He just sold his company, Boomtown. It's not like open. They don't even tell you what the price is. So, I don't see that benefiting the seller at all. And, sometimes they'll take less for better terms. Like, how do you communicate that? Or maybe they just realize that one of these buyers is going to be a total pain in the ass, where they say, hey, we're going to do every inspection possible. My buyer's an engineer, and someone else says, I love old houses. You can't factor that into price and terms.
That's why it'll be interesting when the Gen Z becomes buyers who, like, in the last couple of years grew up on this Robinhood, trading app as a way to like get into their first investments, or Bitcoin or ETH or all the other wild cryptocurrency, that when they get into real estate, it's going to be like unlike any other investment vehicle they've ever gotten. My first stock that I bought, I was still looking in the newspaper. My first stock I ever purchased was,
what are you, 70 years old?
was Sirius S, and I was like 18 years old, and I was looking at the updates every day in the newspaper. It was much different than seeing the, so I would just get day over day data. Now, obviously, a stock, you can have data on the seconds. And, is Gen Z going to want, pricing data per day? Like, are they going to see home values fluctuating by the day and not by the month, how we've historically viewed home prices?
Gen Z is going to be in for a wake-up call when they get into the real estate market. How'd the crypto investing work out for them? Not well, right? And I just, look who holds all the wealth. It's the baby boomers. You think you're going to get those people to change the way they do business? You've got to know how to do things old school, and it's going to be tough for them.
It's just the mindset of how they're going to think about pricing when they're coming in and bidding. Only 4% of Gen Z are homeowners right now. So now that might lead us to the last conversation there, where the FHFA wants to see more homeowners, and they've made some changes to do that. I know, Tom, you fell into the same trap as Fox News here, calling this the Biden.
I just was joking around with you. That was more more to prod Byron into having a conniption on air on Knowledge Brokers.
Well, Fox News put out such a garbage headline. I
All
mean,
those news networks suck. Like, I mean, just you got to read like the legit papers here and everything else.
what a joke of a headline this was. Biden will redistribute high risk loan costs to homeowners with good credit. Not exactly how it's working out. And there's a great piece on, I'll put it into the sheet, Bobby, and you can link this one up from Mortgage News Daily, that actually breaks this thing down of what's going on. Because if you read the New York Post or you read Fox, they're spinning this as a real political situation that, number one, I don't think Biden is even aware of the change.
Anything?
Okay.
Oh, sorry. I didn't mean to say that.
I'd imagine he's not aware. It's not a White House decision. It's an FHFA rule for Freddie and Fannie loans, which is the majority of loans. And it just happens to be under the watch of the Biden administration. So they're really trying to politicize this thing in a way that they don't need to. So this refers to loan level price adjustments, LLPAs, imposed by Fannie and Freddie. Okay, so that's going to make up the majority of loans. It's based on features like credit score, loan to value ratio, occupancy, and debt to income ratio. Okay, so it's going to, again, apply to most loans in the U.S. It goes into effect March 1st. So that's next week. I think that's next week already.
March 1st was 5 weeks ago.
Not next week. I'm
I
sorry.
think it's May 1st, not
May
March
1st.
1st.
It's May 1st. So not next week, but it's the following Monday. So it's right around the corner here, which is why it's in the news. So the effective penalty for having a credit score under 680 is now smaller than it was. So what these guys would do, or these lenders would do, is they'd go, when they have somebody under a 680 credit score, is they would go to adjusters. That's why when you go to a local lender or even a national lender, hey, what's the credit score? Well, it depends, right? What's your income? What's your credit? How much money are you putting down? Even location matters, okay? Meaning state to state. So the effective penalty for having credit score under 680 is now smaller than it was. So there's a cap now on those adjustments for people with lower credit. It still costs more to have a lower score. Okay, so here's an example. If you have a score of 659 and you are borrowing 75% of the home's value, you'll pay a fee equal to 1.5% of the loan balance, whereas you'd pay no fee if you had 780 or above. What they're saying, what they're spinning in the media is this group of like 720 to 759. In fact, a director at Toole gave me, quoted me a line here to use. Okay, so lower credit scores are getting a little bit of a break, but higher credit score overlays change slightly so those buyers don't get as good of a deal. The main group that will get a little worse is 720 to 759 credit scores who are putting down specifically 15 to 20% down on the home. If they're only putting down 5%, as their down payment, they actually have a lower LLPA. The least money you put down with better credit, you're actually saving money, if you can believe that. The more money you put down for whatever, that middle range, like 20%, you will pay more than you would have before May 1st. You still get a far better deal than people with lower credit. And I don't know that you could consider this a subsidized trade-off like Fox News is pitching. So I think it's just now, do I ultimately think this is going to create more home ownership by stimulating the bottom? No. I mean, they're going to save if they are lucky enough to get a house on a $300,000 loan in the scenario that I talked about with the 659, this is in the Mortgage News Daily, they would save over $3,000 in closing costs, $3,700 in closing. That's a huge number. But do I think this is going to help them win an offer? No, I don't. I think there's too much competition on affordable houses. And it's still going to be very difficult to go, so the government often will try to stimulate the bottom. Let's get more people that aren't thinking about buying a home having the possibility to buy a home, as opposed to fixing the major problem, which is stimulate affordable housing being built in the country. That's when you're actually going to help real estate. So I think this is a lot more smoke than it is anything else.
Well, it's hard for 5% down buyers right now. I mean, they're losing out left and right. I mean, we've seen we had a client a couple weeks ago. They bid $52,000 above the asking price, lost out to a lower offer because they were cash non-contingent, and these people waived everything, but they had 5% down, and they were worried about the appraisal. So I don't think it's going to make a difference. I mean, it's a tough time to have a low down payment right now because people are so, Lisa, to your point, they're appraisal sensitive, and I don't care what any lender tells you. If the buyer's putting less down, they look at the appraiser a little tougher. The appraisal a little tougher. Excuse me.
Okay. So you got to be on one end of the spectrum. It looks like here, if you want to have the lower fees, if you have good credit, it does look like you're going to get punished a little bit. If you're putting down 20% and good credit, you got to be either on the low side of money down, or you got to put more than say 25, 30% down to get the benefit. There's a good table, Bobby. We'll put this table in there, the new versus old purchases. We'll flash it up on the screen, and it's in the article, the Mortgage News Daily article, which I'll drop into the sources as well. You take a look at that. And if you're in a market where you're working and advising a lot of people, a lot of home shoppers rather, that have 680 and below credit scores, well, there's an opportunity here for them to save some significant money if they can find the house. And so you would definitely want to get this information out and lead with the advantages to the new changes that are coming out May 1st. But this is why in every situation, the knowledge broker does not get their information from Fox News or any other of these mainstream media rags, because they're going to politicize it into something that it's not. And I appreciate Mortgage News Daily. I appreciate the director at Toole who sent me the text this morning on the actual information. Lisa, any thoughts?
No, I actually have no thoughts to wrap up.
What's your final thought as we wrap up here?
I'm going to go do a bunch more research on data. I think I'm going to go look at our market in 2012. I wasn't in the industry really in 2012. So I actually want to test Tom's theory on stuff comparing 23 to 12. That's what I'm going to spend my afternoon doing.
So 2012 was interesting because that's the year I got in, and the end of the year, quarter four, really nothing happened because Superstorm Sandy was 2012, and I was working Shoreline in Connecticut, which got crushed. It was like, what a time to get in. Inventory,
right.
That Connecticut had bottomed out in the beginning of 2012, and inventory was extremely high. And so inventory was high the whole year, but like nothing happened in the sense of transactions, because then Superstorm Sandy came in and just obliterated the shoreline, and nobody wanted to do anything. And it was very hard to get a transaction under contract. Total reverse of this market. I was talking to some agents this week on my team, and I was like, I had over 50 listings at one point, and I had maybe 3 or 4 of them that were getting consistent showings. I was sending showing reports over with goose eggs to sellers. I'd have 50% of my listings that weren't getting a showing in any given week. I'd host an open house and 1 or 2 people would walk in. And we're talking a long stretch, 2012 to almost 2016, where there were certain price ranges, in Connecticut in particular, because that's where I was working, where you would experience this, a total opposite type of market than what we have right now. And so these things will change. This is not going to be forever what we're experiencing now. But in any market, the knowledge broker is going to have today's data, what's happening today up to the minute in their local market, and understand what we talked about in that fortune piece, that every pocket is different, and go really deep. Don't spend the time to go really deep. Don't let the buyer expose you, who's been spending more time studying the market on Zillow than you have in your own MLS. I guess we'll kick off the weekend with that happy thought. Spend the time digging into the data.
Proper preparation prevents poor performance, my friends. That's the name of the game right now. You got to be so over-indexed on this stuff if you want to win. Here Period. End of story.
And Lisa will be in her new studio soon, so we can't wait to see her there. In a few
Not
weeks.
new, it's the old one. It's just
The old one.
back.
Have a good weekend.
All right. Bye, guys.
Let's roll.